Very good morning, friends and traders. Today, I'm going to teach you about the market profile. Understanding market profile is like seeing the market story. This video serves as a guide for presenting the market profile concept in a simplified manner, using relatable analogies to help the audience grasp the core ideas. The presentation breaks down the components of market profile, illustrating how it reflects market behavior through a series of engaging metaphors, primarily centered around the analogy of the busy marketplace. Unveiling market profile through metaphors. It has three components. One is core idea, market behavior, and analogies. In this presentation, we are going to see the core idea of the market profile and behavior and analogy. What are the components of the market profile is time, price, opportunity. It represents the market activity over time and price levels, and value area where most of the trading occurs. This is the value area. And high and low. High and low, this is defines the price boundaries for a period, and point of control shows the most traded price point. This is the point of control. And finally, we are going to see the day types. What are the day types? And this market profile categorizes the market condition depending upon the market condition. Here, we are going to explore a way to understand how markets behaves almost like reading a story told by price and time. It is called market profile. If the story is told by price and time, present itself as a profile. And while it might look a bit different at first, it is a powerful tool for seeing what is really going on the market. So you can decode it and you can utilize for your intraday trading opportunity. Using market profile, what are the pros and cons for this? We will understand the market behavior. We will identify key price levels. We can make informed decisions, visualize market activity, enhance trading strategies. Consequences are steep learning curve. You need to have steep learning curve, requires time and effort, may seem complex, may not be universally applicable, dependent on accurate data. So, what is market profile? It is the market's footprint. So, imagine a busy marketplace where buyers and sellers are constantly interacting, agreeing on price and making deals. Market profile is like a special camera that takes a picture of this activity over a specific period of time, say for example a day, but instead of just a snapshot, it shows us where most of the activity happened and for how long it has happened. Understanding market activity through market profile. So we are going to see buyer and seller interaction here first, and next is price agreements. The consensus of prices between market participants. The buyer and sellers will agree for a certain price and bid and ask the trading activity will take place. And how much activity duration, that is also very important. The time spent on various market activities, at what price, at what time this price, the activity has been spent. That is very, very important. Understanding the market profile. Key building blocks for this story is to understand the picture, we need to look at its key ingredients. So we are going to build the market profile based on all these things. One is time, price, opportunity. Market profile has been built. Value area, where most of the trade, 70% of the trade will happen in that area. And point of control. Where is the point of control means where most volume where most, at what price and at what time the most price has been traded. That is called as point of control. And high and low we are going to get, and day types. Finally, we are going to derive from this market profile what are the day types we are going to get. That is very important for the trading. Time price opportunity. In a time price opportunity, each transaction's mark. Think of each individual transaction in the marketplace, one buyer and one seller agreeing on a price. In market profile, each of these transactions leaves like a mark, like a stamp called time price opportunity. Imagine each trade as a little stamp on our picture showing us at what price and at what time a deal was made. Market profile transaction sequence. See, you need to see here. A buyer and seller agree on a price. This is they have agreed on the price. And next, what happens is TPO mark created. Stamp is created. See, here TPO mark is created. The transaction is recorded as time price opportunity. And the next thing is specific price and time of the deal are noted down. So by noting down the specific time and price, a profile will be created in the market. First, transaction occurs, and then TPO mark will be created, and a price and type is stamped on the chart. That is market profile. Building the profile, the growing picture. As the day goes on and more transactions happen, more and more of these stamps appear on our picture. Price, where a lot of deals happen, will have many stamps clustered together, while prices where fewer deals occur will have fewer stamps. This builds the profile shape. See, this is the graphical representation of market profile creation cycle. Build profile. Profile shape emerges from the data. Transaction occurs throughout the day, and stamps start forming transaction locations, and then cluster of stamps form active prices. I hope you are getting the idea of that. First, to build a profile, transaction occurs throughout the day. Price stamps during the time. Price stamps occur, indicate transaction locations where the transaction has happened. Cluster stamps form at an active prices. Value area where most deals happen. Now, if you look at our growing picture, you will notice an area where most of the stamps are concentrated. For example, if you are going to a market, it's a vegetable market, that is a confined area. It confined for that market is confined for buying and selling of the vegetables. Like this, it is a area concentrated where buying and selling of the underlying asset has been taken place. So here in this area, we will see an area where most of the stamps are concentrated. This is called the value area. That is the confined area of an asset has been traded during the day. It represents the prices that were considered fair by the majority of the participants during that area. That is a fair price. This graphical representation, this is market value area. Value area is the core of the market activity. That means a confined region where all the market activity may at major time it has happened. And next, it indicates the fair prices where people agree for these buying and selling. Point of control is the busiest price within the value area. So within the confined market area, there is usually one price level that has the absolute most stamps, the single price where most transactions occurred. This is called the point of control. In our marketplace analogy, this is like the most crowded stall or the most popular product of the day, the price that saw most agreement between buyers and sellers. I hope you got this. A most popular crowded stall, or the most popular product of the day, the price that saw the most agreement between the buyers and sellers, that is called as point of control. Identifying the point of control, pros versus cons, indicates market consensus, helps in price prediction, useful for trading decisions, reflects buyer seller agreement, enhances market analysis. This may change frequently. Consequences requires constant monitoring because throughout the day the profile starts building. Suppose if you are on a 5-minute chart or a 15-minute chart, every 5 minutes or every 15 minutes a market profile will be built and point of control will be built and the value areas will be built. So you need to require constant monitoring. Sometimes it may be misleading, but it is dependent on market condition. It's not foolproof. High and low are the boundaries of the day, just like our marketplace as an opening time and closing time. The market profile also shows the high place reached during the period and low price reached. These are the simply the highest and lowest stamps on our picture for the day. For example, here you can see maximum market reach, that is the green color, minimum market reach, that is the red color, high price, low price, and markets daily price extremes. So you will see on the profile, in extremes will be seen in the market, the high of the day and low of the day. So in the market profile, you can see value area, high of the day, extreme, and low of the day is the another extreme in the market. So you have built a profile there. You have built a profile where value area, most of the trades have happened within a confined region, and a market extreme to the high and market extreme to the low, and also busiest place, busiest product which has been sold in that value area, market value area, that is point of control. So we can build a different stories depending upon the day types. Some days it will be very busy, some days it will be very narrow, some days it will be a trendy day, some days it will be a balanced day. Depending upon that, different stories can be built from the marketplace and a different profile can be built in the market. They are called as day types. Now, just like every day in a real marketplace is different, the shapes of our market profile pictures can also vary. So when we create a profile, some types of shapes will be formed. They will vary. These different shapes called day types tell us different stories about the market profile. Normal day is a balanced marketplace. Imagine a typical balanced day in our marketplace. Activity starts, fluctuates within a range, and ends without a strong push in one direction. The market profile for normal day often looks like a relatively even bell curve, showing that buyers and sellers found a comfortable range to trade within. That's what happened in our market yesterday. It was a balanced marketplace. Nothing happened. Neither the range was broken downside, nor range was broken upside. Even the pros and cons we can analyze. Balanced trading will be there. Stable prices will be there. You can predictable patterns and volatility will be reduced. And here in these type of days, you will not have any opportunity. That will be a limited opportunities you will get in normal days. Lower excitement, potential for stagnation. The market stagnated throughout the day. On Wednesday, nothing happened. Less dramatic moves. There were no dramatic moves on Thursday. So even both call and put options were decayed. On that day, it becomes very difficult to trade, so predictability can lead to complacency. Imagine a day where suddenly everyone wants to buy one particular product. The price keeps going up throughout the day with very little selling pressure. That is the market profile for a trending day. Will look elongated in the direction of the trend, showing a strong sustained move. You might have seen that without any break, without any dent, market will run like anything. On that day, usually traders do mistake if they see any, because they are used to that psychology of the traders or like that. If they see any red candles or little correction, they immediately jump in an opposite direction. Usually retailer traders do the mistake. On this day, actually you need to buy the product early in the market day. Then only very correct entry will be possible. Trend day markets sequences, profile sequences, what you can see is sudden increase in the demand. A surge in demand for product occurs. Next, you can see the increase, minimal selling pressure. There is little or no selling pressure in the market. You will not get an even scalping opportunity. There will not be very steep market structure also. And then price increases. There is no nothing. Elongated market profile. The market profile shows an elongated shape in the trend direction. So you saw normal day, nothing happened. It is a trendy day. There is a, unless you get into the market early, no entry will be available because it will be sudden increase in demand. Other day types are different market scenarios. We also have other types of days. For example, a neutral day might show back and forth action without a clear winner. That is like a dozy formation on a day. You might have seen dozy, both the sides will be there. Finally, market will close at a balanced place, at the middle place, like a marketplace where buyers and sellers are testing different prices without establishing a strong consensus. Choose the market day type for strategic trading. Neutral day indicates indecisive market behavior, provides distinct market signals. You have to be on the trendy day. How to interpret reading the market intentions? So how do we use those pictures? By looking at the shape of the profile, the location of the value area, and the point of control, and the type of the day, traders can get clues about what the market was trying to do, where it might go next. For example, POC far from the center might suggest that market was not entirely comfortable at that place. How to interpret market profile shapes and indicators? By the value area position and also day type and POC location. For example, how many times you might have seen when the market starts rising on a trendy day, POC location will be clustered near the bottom of the value area. And value area, what happens throughout the day, if it starts, when it starts building, value area starts increasing. That is another signal for the trendy day. So you can understand or interpret market profile with the shapes like this, formation of the POC and value area position. You can identify different day types, so it will provide you edge in the market in your trading activity. You have to use the story to make decision. Understanding market profile can help traders in several ways. It can help identify potential areas of support and resistance, like the busy areas of a marketplace where price might find it harder to move through. It can also help understand the conviction behind a price move. A strong day profile suggests more conviction than a balanced normal day. Here in this picture, you can see the conviction shows strong belief in maintaining support levels. You might have seen a day. I've made a video saying that 5-minute high of the day and low of the day will be the support of the day. Throughout the day, that 5-minute low will not be broken. So many people might have made trading strategies with open low strategy. You might have heard about it. Like that it is. It is conviction at the support. It indicates into a strong trend day, indicates a decisive move through resistance with high conviction. It crosses all the boundaries throughout the days. If there is weakness at the support, suggests potential breakdown due to low conviction, the market starts breaking below that. I've already made about the 5 minute trend strategy, how to do that. I've explained in my previous videos. That itself will make you understand better. So, why I'm doing this market profile video, I want to combine combine with market profile with my 5 minute strength strategy so that I can bring in more conviction to my trade along with the Keltner channels, along with the 66.6 plus 26.1 percentage cycle levels, circle levels, so that everything in combined with everything, you can build a even more stronger strategy with more conviction, with more timing, so that you will understand when the market is running, you can trade with more conviction. Putting it together, let us look at a simple example. If we see a market profile with a value area that is higher than the previous days and the POC is also higher, it might suggest that buyers were more aggressive and the market found value at higher prices. Like our marketplace seeing increased demand for goods at slight market prices. This is how you can analyze the market profile. Here, central tool for market analysis. Range value area is the range of significant trading activity. Suppose if this value area has been placed at a higher level when compared to the previous day, it indicates a buying interest in the participants. And the point of control also, the rising point of control also gives you an idea, and overall market behavior and trends. It gives you overall picture of the market behavior, market intention of the traders, everything. By reading the market profile, you get an idea. So this is a market profile, is building a profile is a powerful lens on market activity. For example, if you go to a for job application or anything, they will ask you to provide a profile so that it will be a lens for your profile. So that everything, bird view, what you have done, what you have achieved throughout your education career and through your job experience, everything will be presented over this. It is like that, it is a powerful lens on the market activity. In conclusion, market profile is a way to visualize the market activity over time. Here, time is also important. Where the market activity, buyers and sellers are concentrated during at what time? At what time the market stamps will be created, more clustered market stamps are created, and within what area it has been created. All those things you are going to get to know by seeing the market profile. It gives you a picture of the whole market area of the present day. Actually, it also starts building. There are so many indicators for that market profile. One indicator is very best. What I've noticed is that has been coded by Lonesome. That in my next video, I'm going to show you a market profile in a detailed way. I'm coming up with another video explaining the market profile in comparison with the charts, and also so that you can understand. This is a basic video to understand the concept of market profile, why we are looking into the market profile, so that you can understand the things better, what I'm going to say in my next video. It is an educational video. You need to learn. It is very, very important. Learning the market profile is very, very important. It is very useful for your intraday trading strategy. We can gain a deeper insight into the market behavior and make more informed decisions. You will be making decisions with conviction. It is like having a special lens to see the underlying dynamics of busy marketplace. Gaining clarity. You will get clarity in market dynamics, market activity visualization, trading duration analysis, market behavior, you will understand. So, by seeing all those things, you are going to make an informed decision. Okay, friends, this is a normal way of explaining the market profile in a very simple way so that you can understand the market profile when I take you to the real market profile based on the chart explanation. This is a basic video to learn about the market profile. I hope this has helped you to understand what is market profile, why the market profile is necessary. That is the market profile we are constructing on the based on the day-to-day activity, and where time is considered as a very, very important. This is called as time price opportunity. Thank you very much, friends. Nalnakshi Swami signing off.